So Purple Chips with the new president. So what does this mean? First of all, we're going to start with the disclaimer. Now you can read the disclaimer. You can actually you can't pause the screen, but you can read that. And let's move on to the topic at hand. What has changed since Donald Trump has gotten in? First of all, the most obvious thing is that Trump is actually putting up walls, and not just talking about a Mexican wall, U.S.-Mexico wall, but he's actually putting up walls all over the place. And so what we're seeing is that essentially we're getting more walls putting up for global companies. In other words, we're talking about favoring companies that are in the U.S., so domestic companies, people that are doing business in the U.S., and it's all about Buy America. So the second thing that's pretty obvious is that what he's doing is he's trying to reduce red tape. And this is actually something that's really good for business. And I think ultimately that's the reason why investors are kind of excited about what's going on, because for the first time in a long time, we're seeing a sustained movement towards reducing red tape, making it easier for business to work. That doesn't mean global business is going to do better, but it means that business in the U.S. is going to thrive. Now, the other thing, there are credibility issues, and obviously this gets into Donald Trump's personality. The issues are, whether this guy is actually believable. It's the first time in my lifetime that I've seen a president get questioned so much. I mean, he's really seen as a reality star more than a president. And it's kind of bizarre to see this. And I think a lot of people discount what Trump is all about. But I have to give him credit. He is delivering on what he said he would do. Even though, my views are pretty clear, I'm not very favorable to the person, but I am favorable to what he's doing. And the other thing, I guess, what's pretty obvious is that it's debatable whether the U.S. is still in the position of being the world's watchdog. So the U.S. is probably giving up its position as the world leader and the respectable world leader, too, at that. So what happens? Now, with all of this, we're getting a lot more potential for volatility, and that should be a good thing for Purple Chips. Now, let's see, Blair had mentioned this. Let's focus on the issues, more on the messenger. So Trump is definitely delivering on what he said, and we'll see what the repercussions are down the road. And I think there could be a number of positive and negative repercussions. And by that I mean that a lot of the things that Trump is doing could be positive for business, but they may increase the debt load of Americans going forward. So we'll see how that goes. Now, other factors, we've got interest rates that are obviously very, very low, and the signs are clear that rates are starting to rise. So this is a game changer for the stock market, and we'll see how the market deals with all of this. And I see that today the Dow Jones is currently down about 143 points. So we're having a negative day. We started off pretty positive, and now we're flipping onto the negative side, and we'll see if this carries through at all. It's been a long time since we've had a meaningful correction, and that's always in the back of my mind. And I just want to be clear that when I talk about corrections, I'm not saying sell everything, okay? What I am saying is have some cash in reserve and be ready to deploy some of it if opportunities show up. So that correction thing is in the background, and it makes me cautious, but at the same time, I know that by following this approach, in the long run, you will make the most money by just following the plan. So don't let your emotions get into the way, or in the way of disciplined investing. And I'll give you an example. I actually increased my position in Facebook. I hold some options on Facebook rather than actually holding the stock. And I added to my position because what I'm seeing with Facebook, which is a company that most people own because of Purple Chips, what I'm seeing is that the earnings are actually accelerating, and I'm going to show you that actually right now. I'm just going to flip this chart right in here, and you will see what I'm talking about. So you should be able to see this on your screen right now. So this is a chart of Facebook, and it's kind of exciting because the earnings were just kind of moving along pretty steadily, and lately in the last 3-4 quarters we've seen an acceleration in the growth of earnings. That's a very good sign. Now the stock is actually at a 33 multiple right now. It's 33 times earnings, but I'm excited because a stock like this could potentially go to 40 or even 45 times earnings if the earnings accelerate. And companies that have done this in the past are things like NetScout and things like, well, there's many examples, in fact, where you've seen earnings accelerate and then all of a sudden the multiple on the stock actually goes up. So that's why what I'm saying is that in the background, you know, we do think it is possible to have a correction, but you can't let that stop you from being a disciplined investor. And so that's why I added to my position, in spite of the fact that I still have a fair amount of cash on the sidelines. Now, the other thing in the background is that a lot of the Canadian policies are actually diverging from the U.S. policies. And what I mean by that is that in the U.S. we're getting rate hikes, whereas in Canada we're not raising rates. We're talking about raising taxes in Canada, which is not necessarily, or actually is not a good thing, because they're talking about increasing the capital gains tax. You know, in the U.S. there's a strong movement towards reducing taxes, and in Canada we're raising taxes. So this is a little bit, there's a bit of a polarization that's happening there. And so we'll see how that plays out in the market. The other thing, too, that could happen in the background with regard to a Canadian and U.S. differences, you might see a brain drain if taxes are getting higher in Canada. It could be harder to get good people to work here because they may end up going towards the States. That is, if they can get in, of course. So anyhow, that's in the background. Now, let's move on. Okay, this is a picture of the U.S. progression in interest rates, and it's kind of fun to see this because you realize that since 1980, we've had a continuous decline in interest rates. Now, this chart only goes to about 2015, but we've effectively gone down as low as about 1% on these U.S. rates, or 1.5% on the 10-year U.S. rates. So we're finally seeing a bottom in this, and this could be a game changer for the stock market. You know, it's definitely not a positive thing necessarily. Now, what I mean by that is that if interest rates start to rise because of Trump's policies or because business is doing better, that's, on one hand, it's good for business, but on the other hand, it's also going to compete with stocks. So you could see multiples come down as interest rates rise. And the big question, of course, is how fast would interest rates rise? And in the back of my mind, I'm thinking that there's the potential for a resurgence in inflation. And if that is the case, we may be surprised at how fast rates do rise. So just keep that in mind. So that's the picture of the interest rate scenario. And of course, this is the Dow Jones, a very long-term chart that shows you the progression of the Dow Jones basically back to 1900. And you can see the real move started around 1980, and that, by the way, coincided with the decline in interest rates. I'll just go back a slide. In 1980, interest rates had peaked in the U.S., and then, of course, if I look at the same point, 1980, I mean, the stock market had been pretty steady, and then interest rates peaked, and then they started coming down, and, of course, the Dow Jones started rising, and here we are. So that's kind of scary when you look at it this way because there's a very strong correlation there. So that could mean that we could, you know, this could be a bit of a game changer. So just keep that in the back of your mind. And as I said, it's important to follow the discipline because I'm not advocating that anyone get out of the stock market entirely. That would be the wrong thing to do. But it is important to stay focused on valuations. Now, so the big question is, will this all affect purple chips? And the answer is yes, it will, but how much will it affect it? It's not going to affect it much, okay, because we already have a defensive strategy. So our strategy is based on buying into companies that are at historically attractive valuations and that are well below their average valuation. So we're really focusing on super high quality companies that are at the low end of their valuation range, and we're expecting them to go back to the mean valuation, so the average valuation. And so when I talk about all this stuff, you know, I've mentioned corrections and you know, having a little cash, and it really brings up the idea of market timing. And market timing's not a good idea. So I've been saying that, and I honestly believe that if you try to time the market, the problem is that you'll get out and you won't get back in because there's always a lingering doubt in the background on whether or not the market will have a correction.
John, it's Blair. So,
hi, Blair.
Hey, so you know, as you know, sort of politics is a bit my thing. So you talked in general about purple chips, and you know, not much effect sort of from the new president. But are there like do you see industries being winners and losers? Immediately comes to mind on the losing side is pharma, and I know there's some pharma in the purple chips model. Like, you know, he's talked lots of talk about price controls and driving down drug prices. And I don't know, is the winner on the other side, you know, defense contractors?
Well, I think definitely those are two good examples, and I think you nailed it, because defense contractors, this is a case where this is definitely going to benefit. So I could see this, but the big question is whether they've already moved. A lot of these sectors, I mean, the pharma sector is already beaten up, so it's already been discounting the increased regulation. And regulation is never a good thing. So pharma companies, all the multiples have come down. So the question is, are we buying them at valuations that are discounting enough of the risk that could be showing up? And you know, that's the $64,000 question. And I think the way that we hedge ourselves is that we don't necessarily overload ourselves in that sector. And I guess the best example is probably the fact that Express Scripts ESRX appears to be at a low valuation, but I'm a little bit hesitant to jump into that position because they have a fantastic history, but because of the regulation, and it's exactly what you're talking about, this is an area where they could be negatively impacted, and so maybe this is a game changer for that company. You know, we've bought some great pharma companies and we're making money on some, but you know, we bought them at very attractive valuations where I thought the risk level was pretty low. And so you do have to manage that risk, okay? The regulation thing is a big deal, okay? And the fact that the defense companies are being supported by increased military spending, that's a positive thing. I can't think of any particular other sector that will benefit from the changes that Trump has brought about. Actually, well, I guess a less obvious thing would be I've been favoring companies that have more domestic exposure than more global exposure. And so companies like Sally Beauty, I actually think that's it's got great potential, that investment, because it's a U.S. business. Like probably 90% of their business is focused in U.S. And so I like the fact that it's a defensive area, defensive in the sense that you know, they deal in shampoos and stuff like that, and so it's an attractive area to be in. People always buy this stuff, so it's a non-cyclical, non-discretionary consumer spending, if you will. Does that answer your question, Blair?
Sure does. Thanks.
Okay. So anyone else who has questions along the way, don't be shy to pipe in. So I just want to remind, we talked about a little bit about the buy discipline, but then there's the sell discipline too. There's only 3 scenarios where we actually go and take profits on things. And one is that, of course, we reach the target. The second thing is that the earnings come out and the earnings break the long-term trend, okay? So there's like one quarter where all of a sudden, big sharp break. That's a reason for us to take a profit and get out of something. And of course, the third one is if we have 2 declining quarters, 2 consecutive declining quarters in earnings, and that's a reason to get out too. So because we have this discipline, this protects us from, I guess, extraneous situations, okay, where you know, even a market correction. If a market correction affects the earnings of a company, then we're going to be getting out of those positions in those particular companies, and that's always been a good protection for us. Now, the other thing I would add, though, is that, you know, when we see that there's risk in the market, and there could be, you know, at any given time, there could be risk in the market where we suspect there could be a correction. But the thing that protects us with Purple Chips is the fact that we're buying at historically low valuation. So we're always buying when something is below the average valuation, and that's really, really important. That is our defensive mechanism, and you know, we've shown that by owning Purple Chips, you have less exposure to the general market, and you know, they will fall less than the general market because, you know, we tend to be in the best quality companies at attractive valuations. So just a reminder, you know, why, of course, is Purple Chips different? You know, it's got the discipline behind it. We're looking for steady profits. We're not trying to shoot the lights out here. And, you know, our valuation approach makes us sell on strength and buy on weakness. So that in itself is a protection. So that pretty much wraps up the webinar at this point. And I'd like to, you know, if anyone has any questions, just pipe in and go ahead and ask. And the next webinar that we're planning
Hey, John,
is going to be on, yeah.
It's Brad. How you doing today?
Hey, Brad, I'm good.
Great. Just back at one of your first slides, talking about building the walls and whatnot. So I take it you're referring to not only the physical wall, but the theoretical wall for trade and so on and so forth. My concern, and I appreciate if you would talk about this, the Buy American sounds great.
Yep.
But my belief is that there is so much that is made offshore, and it is made less expensively. The American consumer has gotten so used to getting quantity for very little in the way of expense. If Trump is successful and they move everything and it is now Buy American, hence he's hoping that it is produced in America, the baseline price of the goods has to go up.
You're absolutely right.
People are going to be able to purchase less with their buying dollar, and as the biggest component of the overall economy in the States, the consumer, wouldn't that eventually cause lots of problems for the U.S. economy and hence U.S.
It could, and because what you're talking about is a resurgence in inflation. And, you know, for the last 20 years, inflation has been declining. Actually, maybe the last 25 years. And it's been the Fed's priority to keep the inflation low. But what they're doing now, what Trump is bringing about, is going to raise prices and costs for everyone, okay? And it's not necessarily a bad thing. But I could see this being a scenario where inflation is going to be a lot more important than it used to be. And this is one of the reasons why, in the back of my mind, and I don't know if I'll be right about this, but I think that this resurgence of inflation could be pretty good for the gold price. And, you know, that coupled with uncertainty around the globe, I mean, look at all the tension that's happening with North Korea right now and people talking about missiles and nuclear stuff. Those are pretty big deals. And so inflation is real, okay? And so costs are going to go up. We've been living in a low-cost environment for years, where we've always seen that Walmart mantra where prices are falling. Well, I don't think that's going to be the case going forward. Prices aren't going to keep falling. They're going to actually start. They've stabilized and they're starting to go up, and we have to get used to that. So there's going to be a lot of adjustment that's going to happen in the next, I think, in the next few years.
Okay,
Anyone?
thank you.
Okay. Does that answer your question?
Yeah, I mean, I'm just generally concerned overall that, you know, I'm in your camp about a possible correction, and if we take the approach that, you know, Buy America is going to work, well, I'm not so sure that it's going to work out well.
Yeah, I know. You know, it's always in the back of my mind, you know, are we sitting on the edge of a cliff? And that's a normal human reaction, okay? And I think what we do, we have a built-in protection mechanism, and we have to be realistic, okay? And when we talk about investing, we have the science part, okay? The art part is knowing when you take a little bit off the table, okay? Like, for instance, I mean, I've got some cash. I probably have a slightly higher cash level than normal, but I'm not stopping myself from investing. It's important to stay in there, because what I've learned over the years is that the market has a way of surprising us and proving us all wrong. And we have that emotional side is really strong in us, and it always tends to come out on top of our decision making. And as investors, we have to suppress that emotional side. So there you have it.
Okay, thank you.
Okay. All right, I hope I wasn't too long-winded on that answer. But so anyhow, I think that pretty much wraps up the webinar for today. I mean, we're going to have these more often, these webinars, and I think the next one's going to be really fun. We'll be talking about options. And I want to expose and introduce the idea of using options in Purple Chips. A lot of people don't know how to use options, and there is a right way and a wrong way to do it. And I'm going to talk about that. And, it'll be a simple primer on options, okay, so that you understand, you know, how they work and how they're valued. And I'm going to talk to you about strategies that you can use instead of buying really expensive stocks. Let's say, for example, like AutoZone, okay, instead of buying the actual stock, I actually bought options on the stock. And I'm getting pretty much the same movement in AutoZone as if I owned the stock, but with a lot less money put up. So there you go. So anyhow, that concludes today's webinar. And I hope that we'll see you all in great numbers at the next one, which is on April 27th at noon. So don't forget to register for that. So I'm John Schwinghammer, author of Purple Chips, and thanks for attending this webinar.